Hello and welcome to the Dinis Guarda YouTube podcast series powered by Open Business Council and citiesabc.com. Once again, here we are to kick off another fantastic interview with some people that are changing the world and as well coming up with the different iterations of how we can actually use the tools of our times, the technology and the financial tools to improve and create business innovation and another level of solutions that are critical for countries, for cities, and for governments. I think we're going through a lot of challenges, but as well a lot of opportunities. If you look at the media, probably we only look at the negative part, but definitely from an historical perspective, we are in a very positive moment. And today you're going to be talking with a lot of the innovation around the finance, B2B finance, and a lot of the things that are related with electronic exchanges and different parts. And especially it's a very big world that actually is part of my world as well. But in our series, we've been talking a lot of the different areas, but this is the plumbing of the society, the financial background, the backbone, and as well how this affects our world. So I welcome to our series Hirander Misra, which is the chairman and CEO of GMEX Group. He's as well a global thought leader, especially in the areas, like I mentioned, of FinTech and trading and finance. And his company, GMEX Group, is a company that offers innovative solutions for especially the areas of creation and operation of electronic exchanges and all the software that comes with that, both the technology and different trading infrastructure, but as well the relationships with the securities, FX, derivatives, commodities, and of course, all the areas of digital assets, crypto and digital tokenized solutions. Hirander is a dear partner. We've been working in the past, and he has a B.Sc in economics and economics and history from the London School of Economics and Political Science, a master in business system analysis and design from the University of London. And he has a track record of around 25 years plus working and especially developing a lot of strategies around this. He's partner as well of Digital Partners Network, DPN, offering new age digital professional services and especially a lot of solutions around the regulated tokenized hybrid funds, which we're going to be talking today as well, especially the Digital Investment Fund, B.Sc, DIV, for which he's managing director. He's also chairman of CECDX, the Seychelles-based securities, commodities, and derivative exchange, and is the founder and co-chairman of FinCom Eco, a fully integrated financial and commodities ecosystem, providing services to help improve the livelihoods of sub-Saharan African farmers using blockchain. Formerly, he had a corporate experience as COO and co-founder of GMEX Europe Limited, being instrumental in taking the company from concept in November 2005 to reality and launch and ongoing developing and a successful exit to BAT's global market for 365 million. And is as well one of the top influentials in business leaders in blockchain technology in the All Party Parliamentary Group of 2018, and as well has been working a lot of reports for UK blockchain industry. And I think I can go as well for a lot of different things, but what I'm interested here is discussing innovation around finance, technology, and especially how financial technologies can actually create better solutions for countries, especially emerging markets, where I think Hirander is a fantastic work, but as well here in the London city, where his company is based, and with their footprint all over the world. So welcome to our series, Hirander.
A pleasure to be here, Dinis.
So let's start by your basis. I think there's the education that I mentioned. We'll put this bio available for people listening to us, both on the YouTube channel and all the different channels where we're actually going to find us, from Spotify to Apple Podcasts and Google. But let's start by the basis. So you have quite a fantastic CV and career, but where all did this start, and how did it came this entrepreneur and this financial passion?
Actually, it's very interesting. I come from a family of entrepreneurs from generations back that plied their trade in the textiles industry. But I was the only guy or person in my family to ever go and work for someone, actually, for the first time, after I studied and then graduated. But I always knew that kind of entrepreneurial DNA was calling. And some of this in terms of why entrepreneurship, but why fintech stems from the fact that there was under Margaret Thatcher privatization of key state-owned companies, the likes of TSB, British Gas, and others. And my father got very interested in stock trading and buying some of those issuances, which got me interested in it as well. And then I realized that this is something I very much wanted to go into, and then followed that path as well.
And this started what age? I think it's important because I think when we speak about this, and in my case, I have children, you have children, but I think the most important thing in this case is more where that part, because being a son of an entrepreneur or an entrepreneur family, it of course brings already baggage that you can actually use, but as well you shift from textiles to finance and high profile finance, which is actually not a simple thing. And actually you are probably in the most complex areas of finance, which is the areas of securities, exchanges, and all the fund management and creation of funds, which for people listening to us, I think will be as well a learning curve.
Yeah, I was around 12 years old actually when I started to gain a real interest in this, and actually so much so that it was so interesting and topical at the time that even at school they created a share trading game. And in those days, actually, there wasn't the prevalence of laptop computers, but we had something called teletext or Oracle, respectively, BBC One and ITV. And that updated share prices, every half an hour or so. So we started to play a weekly stock trading game at school around that time. This is kind of when I just joined senior school. And that led to more and more interest in this space. And I started to look at what the London Stock Exchange was doing, and what everything that sat off that in terms of brokers and the market as well. So all of this kind of spurred a real interest in it. But then that was mainly from a financial market sense. Where I really got interested in technology was where I joined Reuters in 1996. Post-graduation, and then which is now the Refinitiv business and the London Stock Exchange, and realized even though I wasn't on the technology side, that everything behind the scenes was being powered by technology, but I had no idea how it worked. When I asked the business people how it worked, they couldn't really explain it. When I asked the technologists, all I got was kind of technological speak, but they couldn't really explain the business context. And then I realized that actually there was a real opportunity if you knew both. And that's when I did that master's that you mentioned as well, beyond the kind of economics discipline.
Oh, that's amazing. So let's go through the basis of how we put together the sources, and as well how do you create your first ventures, a bit of your career trajectory. But as well, you touch a very important thing, is that I think for everyone right now, especially what is happening, we are right now, for people listening to us in the future, we are right now in November 2022, which we are in a massive crash, especially when the markets, but especially on the crypto areas. But if you look just 20 years ahead, 25, when you start your career, there was actually even NASDAQ started initially with the Wild West of the exchanges. And even, for instance, everything we have right now in London, Tech City, didn't exist just 10 years ago. So that's a trajectory that I think we are part of this. And for us, it's kind of obvious, but for the rest of people, probably they don't understand the history. So I would like to look at your career and as well some of these challenges. And I know that you have quite a fantastic wealth of knowledge, so you can actually touch the two things, so at least top level.
Yeah, no, it's really interesting because everyone talks about kind of these downturns and these bear markets, but we've had that since the Wall Street crash of '29 and then the Great Depression of the '30s in the US. After a boom period, then things reset and then grew again afterwards. And we remember this as well. Various boom and bust cycles. Going back, let's say 2008 as well. And mortgage-backed securities, even in financial markets. And I think we've seen this as well with crypto, with the crypto winter that befell us in 2018, and then there's a period of rebuilding again, and now we're seeing it again. And there's been various interesting events, far from good. More recently, as you mentioned, this cyclical side, definitely exists in equities markets and other asset classes, and crypto is no exception to that. But I think, one of the things there, having been through these cycles, both in the traditional markets, but also now on the digital asset markets, one thing that it's actually taught me is actually most of the innovation that happens is when that bubble bursts or there's a reset, because it's a good time without the hype for people, especially if you look at what you're doing or some of the things that we're doing, to really start to look at innovation and really start to build something meaningful that reaps the rewards in subsequent years to come. And we're certainly seeing that in, let's say, digital assets as an asset class, and this whole movement from Web 2 to Web 3. Of course, much like the early days of the internet, we're in the nascent stages of this technology, as you know, as much as I do. But therein lies the opportunity, because there's a lot of improvement that can be made with some of these business models. And with financial markets, you and I have spoken about in the past how, if genuinely used, the technology could be game changing and democratize finance. Now that seems like a big word, but certainly a more micro level, a lot of the work you mentioned that we do in Africa, you go to somewhere like Niger and Niamey, the capital, it's 3% banked, and there's no real mainstream access to finance for 97% of the population. And technologies like this can help leapfrog kind of existing constraints and banking constraints, both on the retail and the wholesale side.
So let's talk about your company. So I think a bit about the companies. You are involved in a lot of companies, but from GMEX Group, and as well some of the other things that have been working. Let's just look at what you're doing, some of the products, and there's no problem here. This is a podcast that is quite open. Just talk about how it works, because I think it's important for people listening to us. Of course, there's some projects that are more, that everyone understands. Of course, what you guys are doing is much more complex, but I think that's the idea of this podcast, is making it simple and understanding. And as well, what you're doing is quite exceptional.
Thank you. So, GMEX Group as a company, as of May this year, is 10 years old. So, there's history there. But for 5 years of that, it was very much a focus on traditional asset classes where existing exchanges or new exchanges want to have technologically advanced solutions to run the exchange and the post-trade infrastructure. And we certainly provided that. So Vietnam's national derivatives market runs on our technology. India launched its first gas exchange under Indian Energy Exchange before it spun out to stakeholders like the National Stock Exchange of India, and that runs on our technology. To everything from certain types of crypto markets where Taurus stock exchange that's regulated in Switzerland also runs on our technology from the trading side. So, but we got into digital assets about 5 years ago with a US CFTC regulated venue, where we provided the trading platform to run the exchange, but then realized, to get into digital assets, there are a lot of nuances, and a lot of the efficiency could be on the post-trade side of things. So we did a lot of work to put in place that infrastructure, but then realized actually the world is going to be hybrid, because the neo or digitally native players think that everything will go blockchain based and go decentralized. The traditional players have got infrastructure that they're running, and they're still using IBM mainframes in some cases for post-trade processing. We realized that actually there needs to be a combination of these two technologies converging so that we create a construct called hi-fi or hybrid finance, because the old and the new need to coexist and be interoperable. To that end, we partnered with Amazon Web Services, or AWS, as I call them, recently, and came up with a microservices version of, think of it as an adapter plug or an orchestration layer to connect this traditional infrastructure with APIs on the one hand, with multiple blockchains and that blockchain infrastructure on the other hand. And we've just recently augmented that acquisition with Pictor, which is an acquisition from ING earlier this year in July, which is a blockchain custodial network to settle transactions, but also then gives the ability for firms to self-custody or offer digital custody solutions in this space, combined with what we're doing on the exchange and marketplace side. So very interesting, because we're kind of saying, okay, software as a service and platform as a service, but really this can't be standalone. It's got to be a network of networks approach, because everyone in the industry seems to be building vertical silos. But that in itself is the irony, because this technology allows us to be more distributed. Yeah, our argument is, okay, great, you've got a franchise, you've got to be vertical, but you also need to be horizontal across the market and collaborate. And that's where we come in now for tier 1 banks, tier 2 banks, tier 1 and 2 asset managers and exchanges as well.
Oh, fantastic. And I know that this is, for people listening to us, it's a multi-billion-dollar business, and there's a lot of opportunities here, but a lot of challenge, especially as FinTech becomes a much more complex between centralized and decentralized organizations, and a lot of things in terms of digital assets, and how we look at the different legacy finance and I would say more advanced finance. So let's look at the questions your company and some of your solutions work with, especially the legacy finance parts of like you mentioned, banks, exchanges, governments, which you work for, and all this innovation, because you guys as well are on the cutting edge of AI and blockchain.
Yeah, I mean, with that, you see, APIs are very much going to continue to exist. So, if you look at open banking, which is API driven, and you look on the exchange and trading side, there's something called fixed protocol that's used to transmit orders and trades as well across the market. So, and now both on the crypto side, but also on the standard banking side, there's REST APIs as well. So we're saying APIs aren't going away anytime soon, and traditional finance, or TradFi as I call it, will exist. Coupled with that, you've got a lot of the crypto and digital asset exchanges. They're actually centralized finance-based exchanges, or CeFi, which means they run centralized platforms, and then things may settle on-chain as well. So you've got a combination of off-chain activity and participants that want to get access to the asset classes, but don't necessarily need to be on-chain. And even if you're on-chain, then the question is which blockchain? And on the other side, obviously, you've got these multiple blockchains and decentralized finance, or DeFi, as I call it. So I think, with all of this, it's interesting. We had a call today with a government that wants to introduce a wholesale central bank digital currency, and before they move into the retail space. And the argument is, okay, we want a private permission ledger, but we realize that actually we can't ignore public blockchains. I think a few years ago, all the banks dived into projects that were private ledger based. Think of it as the old intranet, but are very quickly realizing, of course, for certain uses, that's great, but actually they really need to, like the access to public internet, they really need a wider degree of access to public blockchains as well. So there's going to be a combination of these technologies and convergence. And as you rightly said, AI and blockchain is interesting because everyone talks about blockchain-based smart contracts, but really recently there's been some flaws. I mean, not in necessarily those contracts themselves, but the fact that they're using centralized oracles for a decentralized construct, and it's only as good as the data that comes in, which is sometimes garbage in, garbage out. So I think that there's room for improvement there, and we're seeing data analytics and AI combining with blockchain as a real opportunity. One example, just for those listeners, is the fact that there's something that we're doing that we'll announce in the coming months, where we're looking at sustainability, and we're looking at carbon credit markets, where there's double counting of credits and fraudulent credits as well. And using technologies like AI and immutability with blockchain can really help address that, and then help provide wider market transparency on the marketplace side as well, and bring together disparate marketplaces and participants where the market's fragmented, and knit that back together.
So let's look at, so from, I don't know, probably can use a case study for people listening to us, because I know that we're going to do technical, and you and me can go technical, but for most of people, probably they don't even know what is an API, or where is a decentralized exchange or a centralized exchange. So let's go for a definition of these two things. And I think you are probably the best person to do this. And I think it's really important for people listening to us, because I think one of the biggest challenges, especially what is happening in the markets, is that we're talking about, for instance, the case study of FTX, which is probably the biggest in a long time, actually. Not actually as big as the the Prime Minister of the UK that actually stole, at the end of the day, made a bug of £40 billion in the British economy. So if you look at that, and actually we all will pay, then she will not go to jail or anyone in the government. But I just want to use the parallel, not in any political, but just for people to be responsible. If someone does a damage of £40 billion, you cannot just get out and get a someone has to have responsibility, because of course, in the case of FTX, there's a lot of big things, but I don't want to make this about present, but I just use this as an anecdote of the complexity, because FTX was a $30 billion company that just went bust and actually took with that a huge part of the crypto world. But if you look at what the last Prime Minister and Minister of Finance of the UK was £40 billion, which is bigger, and it was done in the space of 1 month. So I just want to highlight that the parallels between crypto and the real finance are not so different. But I just want to go right now. So let's look at, how do you define an API for people listening to us? Of course, you can always search in Google.
Yeah.
But I think it's always like to, and as well as centralized versus decentralized exchange. And as well, I know that's 2 questions, they're quite big, but in a summary, because you probably can answer that quite fast.
Yeah, so API, or as it's defined, application program interface, is effectively a messaging standard. So much like you and I are now speaking in English, or someone else could speak in French, it's a communication between one platform and another using some form of messaging. And you know, everything we do there, you know, for example, when you enter payments into via your mobile app or via your desktop or laptop, then something happens at the back end. It's an exchange of messages in terms of what you're communicating and then the system that's processing them. So that's an API. Now, in terms of centralized exchanges, it means effectively buyers and sellers coming together on some form of centralized platform, or it could be a marketplace. Let's say your everyday users maybe using Amazon or other equivalent platforms to buy. Well, you can buy pretty much everything these days. It started with books, but you know, there's groceries too now, and that's a centralized platform where there's one or more sellers, and then on the other side there's buyers, which could either be business and related buyers, i.e. corporates and companies, or it could be retail buyers as well. But they're all coming together on a central platform and buying and selling. And a lot of the crypto exchanges out there, the major ones like Coinbase, Binance, that's a form of centralized exchange, much like for different purposes, the Amazon example. Decentralized finance means that it's much more distributed in that there could be lots of individuals that now want to interact with each other, but they're doing that through a smart construct called a smart contract, where they can exchange data between themselves, whether it's prices, whether it's the need to buy or sell. And the smart contract then locks in those buyers and sellers, which could be anywhere as well. And so it's much more distributed, very much less centralized, and can be used as a mechanism, you know, now from this Web 2 construct that's more centralized to move to Web 3, which is more decentralized.
Thank you. You are very synthetic, and I appreciate that. I think it's for people listening. I think probably we'll create a clip out of this, because it's really important for people to demystify these things. So I want to ask one question. So you're working with legacy big exchanges. You mentioned some of them. And you are as well creating a lot of tokenization solutions for some of these exchanges and for new ones. So we have the likes of, at the moment, actually, we have 2 major exchanges on the crypto that are becoming bigger than actually non-crypto. If you look at Binance, it's bigger. It's the same side almost as probably NASDAQ, or at least in terms of trading volume. And even Coinbase is a public company. So how do you see this? And as well, one interesting exercise, I like to look at data. So there's 58,200 public companies in the world, according to some of the data that I found. And I think this is some of public data. But if I go to, and I would like to make parallel, I think you are the right person to do that parallel. So let's say if you do, and I want to do an exercise with you, sorry, I'm taking this a bit, but I'm pushing your brain here because I think it's interesting as well to talk about your capacities of going outside of the box. So if I look at, like I was saying, I'll repeat for people to listen to us. So if you look at public companies, the assumption worldwide, there's this is as numbers of 2022, where we are, there's around 58,200 public companies worldwide. This is actually most of the world assumption. And if I look at cryptos, which in the end is as well some kind of a digital asset in some ways, people say that is a security or is a digital asset or a digital coin, and there's a lot of discussions. I'm not going through that, but there's at the moment in coin market cap 21,731, and the entire securities world is massive, because you're talking about some numbers. Actually, I think the numbers get a bit lost. Some people talk about $700 trillion of derivatives. The world economy is 80 trillion. So we have a problem there because we are extending the world economy 10 times or 100 times, whatever numbers you want to take it. But I think, for instance, in the case of cryptos, there's 525 exchanges that are managing this 21,731. And the crypto, it's a tiny bit drop in the ocean compared just with Forex markets. Because, for instance, the global crypto market at the moment, that crashed massive from 2 trillion to, as we speak, 855 billion. But for instance, if you look at just the Forex trading on a daily basis, trades around 4 trillion. Yeah. So I would like to see a bit of course, this is a provocation, but I think it's a great provocation. Is how do you see this in the context of the work you do in the traditional exchanges that are afraid of crypto, most of them, and the banks, and as well the work you're doing with the digital assets and the tokenization?
Yeah, so one of the underlying things, and you mentioned kind of FTX and what's been in the press there as well, with a company that was into digital assets as a digital asset exchange, and now filing for, let's say, bankruptcy. A lot of the issues stem from the fact that there's a lack of regulatory clarity in this sector, which means there's a lack of governance, a lack of control, a lack of risk management, a lack of regulation as well. And certainly jurisdiction to jurisdiction, there's certainly a desire to bring in regulation for digital assets, and some of it could be for digitized securities and more AML, anti-money laundering, or know your client for crypto type assets, some of it more far-reaching. And I think one thing's for sure, and certainly events like this accelerate that, there's going to be an increasing level of regulation in this space, whether it's the US, whether it's Europe, where there's already the markets in crypto assets regulation that will be enshrined into law in the first part of next year, and then take 12 to 18 months to implement. And other jurisdictions, everything from offshore centers like Seychelles that got consultations in this, to the UAE, which has got multiple types of activity here, whether it's out of Dubai or Abu Dhabi. What will also then emerge is, let's say, consistency in regulatory standards. There's global bodies like IOSCO or others that look at standards in financial markets. There'll be certainly some work there. But the other thing that will also emerge is, it's important that we weed out bad actors from the market, because when things like FTX happen, it impacts confidence in the whole market, and that has a knock-on effect for all of us as well, because it's not crypto per se that's bad, it's just those actors that were in the environment and they were able to do what they were doing because it wasn't policed, even if it's policed in a pragmatic way. If you can break the law, some will, and then they'll spoil it for the majority. I think the other thing is, as you rightly said, with the number of coins out there and the number of exchanges, it's way, way, way too many. And this space is not susceptible to consolidation, much like any other space as well. So we're also going to see kind of consolidation in this space, where there ends up being a fewer number of high quality exchanges. There's well over 100 tangible blockchains out there as well. That's going to consolidate to a smaller number. There'll still be competition. There'll still be increased interoperability between them. But we're also then going to see fewer exchanges, fewer blockchains, and fewer coins, because out of those, you could argue, okay, maybe you look at the top 25, and it's probably where there's a level of liquidity in them, but there are thousands of them that aren't worth what they're cited at, because they're effectively penny stock equivalents or otherwise. And of course, much like anything, whether you're a retail investor or institutional, you've got to look at the fundamentals and sometimes a lot of this is lost in this industry, where there's a lot of social media and a lot of euphoria as well.
Yeah, and I think you touched the most important. The challenge is that this creates a huge, I think, a lot of noise, that people get confused, and I think it creates a panic as well. At the moment, the challenge that all the innovation that came out of blockchain became kind of negative on the noise of FTX, and this year where actually we seem like we had all the noises, which is not different from the beginning of the internet. In the beginning of the internet, we had cases even where actually Amazon stock went to zero multiple times. So people forget that, but you have to look at history and look at the parallels. But the challenge here is that there's innovation coming out of these technologies. And of course, you touched the regulatory part of this, which I know that we work a lot with regulators. We mentioned the UK regulators where you've been working, Seychelles, and a lot of others around the world. So I think the challenge is, how can we put this kind of world of innovation that is coming out of blockchain technologies and the traditional legacy systems? Because that's the biggest challenge, is that definitely if we don't really create a balance between these, we're going to have even a more crazy system where at a certain point this becomes a complete chaos. And it can become a bit of especially looking at personalities like Elon Musk, a bit of Blade Runner scenario, because effectively it's happening as we speak, that you and me are becoming science fiction and the rest of the world is living most of the world is actually living with $10, $20 per year. Actually, this is per day, sorry. So it's quite a challenge how we look at this financial, and I know that you've been working as well in financial inclusion. So it's a big question, but my question here is, how can we look at this innovation and not get in track of making sure that the sandboxes that we are creating and this innovation works together with the real world? Because in the end of the day, what matters is that is this creating value for society or not, or at least for business, because society is a very abstract, and as well business and as well for populations. Because in the end of the day, if you just create masses of mass or weapons of mass destruction all over all these things, actually no one will trust finance. And then of course it creates a lot of issues that we saw in the past. When there's this kind of cycles, it becomes a huge problem for people like us that are trying to build proper software and proper things. And even people like us get in trouble sometimes because we have to deal with this. For instance, if you look at FTX, Sequoia was a big investor, so they have a responsibility as well. Okay, but I of course put the responsibility as well in governments, because come on, they have to do something. The SEC, in the end of the day, the founder of FTX was actually talking with SEC, and actually was listened, because of course it was the second or third biggest exchange, crypto exchange in the world. So we were talking, and it was investing as well. So there's a lot of complication here because the regulators don't understand. The technology is going very fast, and then of course there's this tendency to speculation that is human, but that creates this thing. So how do you see this scenario as we speak? Because that's of course, where there's a problem, there's an opportunity, but this is a big, big problem that we're facing right now.
Yeah, it's an excellent question, and we can draw some parallels to it in our own lives. So we may well be having this interesting discussion next time in the metaverse, but then, we were talking about maybe meeting up and catching up over a glass of wine. We don't want to do that virtually, right? The experience is very different. So in many ways, it's horses for courses, and everyone's kind of forgetting, yeah, okay, great. We're creating these online environments, whether they're decentralized or centralized, but at the same time, that experience needs to be seamless. It's down to user choice. Yes, we might want to do that interview in the metaverse, but at the same time, we might want to go somewhere physical and interact. Much the same, there was paper post, and then email came. And then various forms of instant messaging came, and now we've got information overload through all these devices with messaging and whatever else and interactions. But actually, paper post hasn't died. It's just a proportion of activity in each bucket can vary over time. And actually, we found a way of using all those forms to our advantage as and when needed. Obviously, the pandemic in some ways was an opportunity because certain things that were very manual were automated. So I think, again, our view, and actually these recent events with FTX certainly further support that. We've been saying for some time that the existing financial system has some very good things about it, but then needs to be made more efficient. The frictional costs need to be reduced because, through technology, much like, you've written about it often, much like there was the Industrial Revolution. Now we can undergo the fourth Industrial Revolution, which means automation, change, but not just kind of reflecting what we did, but changing the way that we do it, which then means we can deploy human capital to more value-added activities and evolve as society, which again, as you said, is correct. What does that mean in practical terms? It means, simply, I often look back at the old telco days where actually, porting data and porting mobile phone numbers, if you change network, was a very difficult task. I think it was easier to climb Mount Everest. But now everything is seamless. It doesn't matter whether you're on one network, I'm on another, or where we are in the world, we can communicate more effectively. At the moment, we can't do that between blockchains effectively, or even if we do it, then there's some flaws, whether it's in security or mechanism, and we certainly can't do that between those kind of decentralized systems and the more centralized kind of messaging-based systems either. But actually, if we go 5 years down the road, we'll be able to more seamlessly do that, so that whatever you want to do, whether it's decentralized or whether it's centralized, it doesn't matter. It doesn't matter, and everything's happening behind the scenes, but seamlessly you're delivered that transaction or that information, and it becomes a lot more push rather than pull with AI and other technologies. And I think that's where even industry is going to be transformed. Think of it this way. I mean, there's a good analogy here. So Netflix, even though it's more centralized, it knows what movies you watch based on your profile. It knows what movies you want to watch. Therefore, it knows what to invest into in terms of buying inventory or even what to produce now as well. That sort of technology doesn't exist on the financial market side yet. There's so much data that's generated, but actually it will start to be deployed over the next few years, because that technology is now well developed with some of these consumer entities, and it will be deployed whether it's centralized or decentralized, which can change the way that we trade, clear, settle, and interact in those markets.
Yeah, I think you could be right on that part of how we can actually make these things really work. So let's look at some of the things you're doing specifically. If you want to talk, of course, any case study you do. I know that we mentioned about Seychelles. I know that you have been working as well the European Parliament, the UK Parliament, and different parts of the House of Lords. So any case study that let's look at positive case studies, because I think negativity, I think the markets and the news are full of that, and I think we touched already some of that. But for me, it's important because even what happened in the UK is particularly alarming, because in the space of 1 month, one minister that was not elected and the Minister of Finance really created a hole of £30 billion that right now, and actually partly were the markets that stopped that hole, because otherwise it would be even bigger. So let's look at some case that you want to highlight, because of course the UK has been always on the cutting edge of technology and finance, especially finance and tech. But as well, right now is actually a recession with a lot of challenges. And of course, this is a global program. But I would like to look at probably one case study in, let's say, Western world and one in emerging markets, to see some things. And I know that you have a lot of case studies that you can share with us, where actually there's more positive things going from your work.
So one of them, so one of them you mentioned, we're capital constrained, whether it's governments or whether it's firms, and capital efficiency becomes very important, even though, like you said, given the change in UK leadership, spending what you don't have, comes back to bite you as well. But really, one of the case studies is at the moment we're working with a tier one bank custodian, and this isn't public yet, but think one of the leading custodians. They have assets under custody. Now, what they want to do is, I mean, they're working with a tier one asset manager who custodies Bitcoin with them, creates an exchange traded product, and has listed that on traditional exchanges. But now they want to tokenize that, and they say, okay, how do we get wider access to users, and how do we give those users access to products that they don't have? So through wallet integrations and through digital exchanges, they want to distribute that. And the same, and that kind of opens up these sort of financial asset classes that have been much more restricted to a much wider audience. And also there's a two-way benefit because it opens up the institutions to a wider range of potential customers, but it opens those customers up to products that they wouldn't have dreamt of having access to through new channels that are digital. But at the same time, when those assets are now held with a multitude of custodians or in your own right, using, let's say, digital custody technology, those assets, without moving them, which can be not so green, constantly moving them on chain, you can use those as collateral, and you can make that credit available to trade against each other as companies and a multitude of trading venues, and then get certainty of settlement as well. So, you spoke about leverage. Yes, as governments, as corporations, we're leveraged, but economies of scale and capital adequacy are really important. So that's one set of use cases that's genuinely facilitating that. The one on emerging markets is quite interesting, and this is both an emerging market play and a developing one as well. But typically, there's a lot of sustainability projects that we're coming across, and there's various African countries and so forth. But the ability to finance those projects is very constrained, and at the same time, yes, some of these projects may generate carbon credits, but the ability to validate those, and then the legitimacy of those and provide those to buyers of those credits is quite constrained, because the market's very fragmented, and given the fraudulent activity and double counting within it. So some of what we're doing is lending our technology, and this is something that's called multi-hub, running on AWS, to connect multiple kind of over-the-counter markets, centralized exchange markets in this sustainability space, and multiple registries together, and provide those suppliers distribution to buyers, which then in turn brings them finance to finance projects that are more sustainable and drives development in that sense. So this is quite interesting, and it's an area that I'm very passionate about, and we're going to see lots of developments here. Of course, governments are announcing their drives to net zero, as are corporations, but there's a lot of greenwashing, and I think we've got to make this a reality about what's really happening vis-a-vis kind of a lot of this hype that's out there. A bit positive benefit, of course.
Yeah, that's I think what matters right now. I know that we're passing the time. I don't know if we have a question, at least for one question or two. So let's touch about the challenge around the legacy systems and the new innovation. So let's talk right now, and it's an area that I know that you're quite involved. So you're discussing a lot of innovation with exchanges and with governments. So how do you see areas, specifically in the areas of ESG and the carbon neutral? How can we actually look at these areas? Because this is critical. And I think when we're looking at companies, of course, that's all the challenge we just mentioned, that not going to disappear anytime soon. But that as well, all these, at least some great concepts that are there. But do you think they are concepts, and for people listening to us, ESG is environmental sustainability and governance. And please, there's a lot of information online. Please get into this. But this is a multi-billion-dollar business that actually right now, most of the public companies have to go and apply to this. In some cases, actually, some companies are not able to do it, but this, especially in Europe, in emerging markets, it's another challenge. But how do you see these concepts, and especially in the things that you're working on your own with the GMEX? Any things that you want to highlight from your projects, from the things you are doing right now?
Yeah, I mean, what's interesting is, there's various governments that want to set up voluntary carbon markets for sure, and marketplaces for that. So we're certainly engaged with some of those, and others have approached us. But what we're saying to those governments is, great, you might set up your voluntary carbon market. And it's interesting, some of these governments, you think they'll look at this from a domestic construct, but they're saying, no, we want to set up voluntary carbon markets, but from an international perspective. And of course, there's different standards, beyond the geopolitics with China and the US and other parts. There's different standards in terms of those carbon credits and the way that those markets are set up and operated. What we're saying is, yes, there's going to be a multitude of these carbon markets. There's going to be a multitude of registries. And what we're finding, we spoke about APIs earlier, but some of those carbon markets are kind of, and carbon registries are almost in the dark ages, because there's no level of automation, there's no real validation of data and artificial intelligence being applied to them. So what we've done is, we partnered on the AI side, and it's something that'll go public in the next few months, with what we're doing on the blockchain side. So we're saying, okay, all of a sudden now you can create like a meta registry construct, like a consolidated registry view of lots of registries, lots of exchanges, a bit like comparethemarket.com, and be able to now harness validated activity from across the market in terms of carbon credit supply and carbon credit demand, and bring the two together, but be assured that it's a valid credit. But beyond that, we're also now beginning to work with various benchmark providers to say, okay, great, how do we create benchmarks to measure this activity by? There's been certain scandals recently where on the asset management side, there's ESG funds, but when you look into them, they're not really ESG in the truest sense, and in terms of the selection of the activity that they're invested into. And this is very important, because if something says it's ESG, how do we measure that, and how do we make those organizations offering those products and services accountable? And the technology, AI and blockchain coming together now, and through some of the uses that we're doing, lends itself to that. And there's a huge data analytics play here, which is interesting for the likes of NASA with satellites up in the air, and others as well. So, watch this space in that regard. And what we do say is, to any governments or entities working on these initiatives, yes, you want to be the biggest, whether you're a country or you're an offering, but actually you can't really do this unless you collaborate cross-border. And isn't that supposed to be the whole purpose of blockchain and technologies like this, to make that collaborative effort a lot easier? Yet it beggars belief how many people are protecting their own offerings. But I think we're going to see this open up, even if initially it's selectively open, before it opens up more widely. And I think competition is a good thing, because once a number of players start to offer it and there's positive benefit, it forces the others to come to the party as well, because no one wants a walled garden in a closed ecosystem.
Yeah, 100%. This is actually one of the things. So to wrap up, and I think, well, we're going to put all the links for this. So the company of Hirander is GMEX-Group.com. And there's a lot of different things. So one of the things I would like to touch is, and I like especially one of the graphics that you have in your website, it's about the way you look at the multi-hub, the technologies, the fusion, the service, the innovation, and the decentralized or permissionless digital market infrastructure technology. So to summarize, and this is quite a big thing, but I think just as a summary, how do you look at all these things, especially in your work with GMEX, but as well the different iterations that you're doing worldwide? Because that's complex. When you look at this, there's an ecosystem. There's an ecosystem that we just talk about: blockchain, AI, all the different technologies, but as well, how do you put all the different things? And especially that's what companies like you are doing. And especially FinTech is how we put all of these different things together.
Yeah, one, collaborative partnerships are really important. You and I look at things, and we know that I should have been better at maths, but 1 + 1 can really make 11 if we put our heads together well. And the positive benefit of collaboration cannot be understated. So we really do anything alone. Much like this multi-hub where we connect various players, we partnered with AWS to do that, and that's positive benefit, because then there's 65% of digital asset companies using their network, and there's a positive benefit. The other thing that I'd say is, much like the world has different languages, there's different ways to communicate even between platforms. We've discussed some of those with blockchains and also with application program interfaces. And really, our core ethos here is it shouldn't matter how you're communicating or by what means. You should be able to communicate between these different platforms. Much like now, okay, we and I may not know 100 languages, but there's tools like there's tools like Google Translate and other things out there that lend themselves to that translation. So that orchestration and translation becomes really, really important. And I think this collaboration, it's a combination of virtual, practical joint ventures, but also in person as well. You know, it's one of the things that I know you've advocated, and these forums are a good mechanism. But you know, we've got in January that hopefully you'll participate in. We've got a digital transformation event coming up. We're collaborating with the Association of Futures Markets for that, and that brings together a lot of players to discuss these things as more as a workshop that's practical, rather than, you know, these very high level panels that don't go anywhere. So I think different forms of collaboration are important, and I think you can't underestimate. I was on a fund management conference in Cyprus recently, and we were talking about the importance of education in various means, and that's not necessarily just academic and research, but practical education that's important as well.
Education is always the most important thing. So for people listening to us, and of course we didn't touch the securities, I think probably we'll do another one. But I think, and I want to be conscious of your time. So on the security sides and on traditional finance, and I know that at the moment there's nothing really traditional because things are always changing. What would be the notes, the final notes that you'd like to tell to our audience? And as well, I don't know if you want to highlight the work as well that you did in Africa, which I think it's quite interesting, and as well in Seychelles, which is as well an emerging market, although it's more known for tourism, but there's a lot of things in finance over there.
Yeah, so you know, two things. I mean, starting with the Africa side, I think, you know, it's really interesting that a lot of those economies are smallholder farmer based as well, or artisan producers, and they don't necessarily have access to finance, or there's a lot of middlemen in that ecosystem. And you know, even for farmers to buy pesticides, fertilizer, seed, there's constraints in terms of finance. And even if they get the finance, it's at very high interest rates, or if they try and finance some of their crops in the future, etc., there isn't really a distinct market. So, you know, sometimes coffee producers get 10 cents on the dollar compared to you know, what the coffee actually retails at as well. So I think, you know, we're seeing blockchain and automation and electronic warehouse receipts and other means, and opening up financial inclusion there as very, very important. And I think on the securities side, you know, it's interesting. There's a lot of opportunity in securitized products, and then tokenizing those and listing them through wallet integration with new exchanges. At the same time, I think fractional ownership opens up those broad ranges of players. And we're seeing parallels with sectors like esports, where you've got a lot of crypto users that play to earn, and being able to bring those into mainstream finance and making kind of traditional assets in digital form, such as securities, available to these types of players, or it could be tokenized real estate and intellectual property. I think there's going to be a lot more development in that kind of space as well, bringing together what seem to be disparate kind of threads. Esports and institutions on the buy and sell side seem far removed, but actually those worlds are converging as we speak, and we're going to see more and more interaction with those kind of cross-sector plays as we move forward.
Definitely. Well, I want to thank you, Hirander. It's great to have you here. I think as we are business partners for a long time, and I think it's the first time we are here, so it's a great pleasure to have you here. I think your level of knowledge, we could go for more hours, and definitely we'll have probably another session. I think probably discussing about the future of centralized versus decentralized would be a great kickoff. But I think for today, we will put all the links. I think it's 1 hour that we got here with a lot of good content. For people listening to us, I think just search for gmx-group.com. There's a lot of great content. Hirander writes as well. There's videos, there's interviews. There's an article precisely about blockchain and ESG. There's a lot of things you can find in the website. And I think that's very important, because I think what I tell everyone listening to us is learn and keep. That's what I do with Hirander, and that's what we do here in these sessions. That is knowing the people, knowing the projects, and keep our research. Thank you so much for being here, Hirander.
My pleasure. Thank you, Dinis.